Today is Friday, July 8th. Market's not open just yet, a few more minutes to go. Did have the jobs report, much better than expected. Unfortunately, it revised last month's lousy report even worse. So who knows what's going on. I like to look at things behind the scenes. You expect stocks to be up, bonds to be down, on that kind of news, and that's what's happening so far in the pre-market. But take a look at a few other things. The first is gold. This is the GLD ETF. Not open yet, but in the pre-market, it's actually trading higher. It was lower before the jobs report comes out. Now it's trading higher. I think that's telling us something, that this is not a good thing. Whatever we think of the initial reaction to the jobs report, probably not a good thing. But I want to look at the other commodity type countries and currencies just to see that this is kind of a rounded thing. Commodities really are back right now. So this, let's start with over here. I've got a list made up. This is the Canada ETF. Actually, I don't need that line. And it looks pretty decent. I'm going to change this chart type a bit. We don't need some of these things. This is price relative, price versus the S&P 500. So it was outperforming, kind of flat right now versus the S&P. So it doesn't say that commodities are back, but it's showing us that one of these commodity countries is right up there. And it's not as bad as we thought, like say with emerging markets, where they were very weak, as you could see earlier in the year. Emerging and other commodity-related markets very weak. So it looks like it's coming back. It's above this 200-day average, above the 50-day, or should I say riding the 50-day right now. So that's a positive thing. Australia, EWA ETF. Again, the trend line is from a previous recording when we're looking at this kind of thing. Not outperforming, it's market performing, but still above the 200-day average, so that's a positive. New Zealand is an ETF, ENZL. This one's leading, obviously breaking out to the upside, looking very strong. And finally, this is South Africa, EZA. Again, not outperforming the market, but challenging that 200-day average, and that's a good thing. This is more of an emerging market, and I wrote a piece about emerging markets maybe 2 weeks ago saying that they were actually back. That was pre-Brexit. So they're not bad. I think commodity areas are a good place to look for any kind of opportunities now. Now I'm going to take a look at a few other things. I'm going to look at the currencies. FXC for Canada. It's actually up in the pre-market. Looks like it's about to break out to the upside from that triangle. FXA Australia. Similar, not quite as organized. The point I'm trying to make is that I see a shift towards the commodities area in general, from commodities producing countries and their currencies. And finally, this is kind of out of the blue. Look at yen. And why yen? They don't produce commodities. Well, it's that safety currency, and right now you can see that it's in a strong rally. It's up even higher after the jobs report. That tells me something. Like, why would this safety currency be up when stocks are flying and bonds are pulling back? You can see that it's now above this resistance level. Now, is the level there or is it there? It's kind of pick your poison on that. But I definitely think that this thing is still strong. And if we could get, let me just quickly change chart types there. Oh, that's the wrong one. All right, I don't have it set up quick, so I'm just going to make it. I'm going to put an RSI in there just to get an idea. Now, it's a 14-day RSI. It's probably not the one you want to use for currencies, but not even showing overbought, at least on this indicator. So yen very strong, even as commodities go up, even as stocks go up this morning on the initial reaction to the jobs report. So there you have it. I'm not convinced that anything is really good happening here with this jobs report. So take that for what it's worth. I would say that if you're looking for opportunities in the stock market, I think this would be the place to go, the commodities related areas.